Bloomberg Audio Studios. Podcasts, radio, news.
I want to go back to something you said a little bit earlier. This notion that it's hard to see whether this is a one-time hit to inflation or whether it's more persistent. Ultimately, what do you think?
I mean, ultimately, any effort to force manufacturing back onshore into the United States is going to be inflationary. There's no doubt about it. And what frustrates me on this is that one of the reasons that Trump won the election was the American people had had enough inflation. They wanted a break from seeing their standard of living deteriorated by the ever-increasing price of goods and services. And so I really do think that the president needs to think long and hard about the necessity of helping to protect the standard of living of the American people by keeping the inflation, like, it's not a genie, it's like the inflation devil in the bottle.
So what does this mean for Fed Chair Powell? How difficult does this dynamic make his job, and do you think his job is secure through May of 2026?
I got to tell you, I'm really happy not to have his job. Like, he is the biggest no-win job in the country, because through the lens of hindsight, we will always be able to second-guess every single decision he makes. Right here, right now, he's grappling with, do you cut rates as the labor market shows ever so slightly signs of softening, or do you hold the course because of the risk of an inflationary spike coming from tariff increases? He's going to have to make that decision based upon evolving policies over the weeks ahead. It's a really tough predicament he's in right here, right now.
Ken, it sounds like you have doubts that the American economy can be easily transitioned into a manufacturing one. What are the chances of making that work? And do you think that it's a realistic goal?
I mean, look, there's a great video clip from Dave Chappelle, and it goes something like, Americans want to wear Nikes, not make Nikes. And I think he's spot on. I don't understand why we think it's a virtue to bring back to America low-skilled jobs in manufacturing. I completely agree with the president. We need the ability to ramp up our manufacturing base to strengthen our national defense. Spot on right. But I don't think the American people are looking for a return to low-skill, low-paying manufacturing jobs in our country. I don't think they want those jobs. I think they want jobs where we are building high-value-added products, successful businesses building high-value-added products where you can create jobs in that factory floor that are well-paying jobs. Those are the jobs we should aspire to create in our country, not jobs that right now China is actually trying to move to other, even lower-cost labor countries. Why do we want those jobs here in America?
I'd love to see this from your position leading Citadel and also your message to Citadel Securities employees. What do you tell them to navigate all of this volatility?
So I will tell you that for my portfolio managers, it has been several really challenging weeks, because every couple of days there's another big headline on Bloomberg that we need to react to, and we need to reshape our portfolios with respect to. It's been a really difficult time for fundamental investors because so much of the value of the companies that we invest in is being dictated by very quickly changing policies from Washington.
So your best way to navigate that?
I think in retrospect, perhaps holding cash would have been the best way to navigate this, but that's so contrary to our culture of always trying to be on the offense, always trying to find ways to create value in the markets.
Is there something fundamental that's changing about the way you approach markets?
Look, I fundamentally believe that this period of instability that we're going through will come and go. Like, fundamentally, I believe that as the Trump administration moves through time, as policies become solidified, the economic backdrop against which one invests capital will become easier once again.
Now, when you look at the tax bill, it looks like the direction of travel is such that you have $4 trillion in tax reductions, but 1.5 billion here in spending required. 1.5 trillion, very sorry, trillion with a T. How is that going to close the U.S. deficit?
Well, I mean, what's clear is that the numbers that we talk about in America are almost incomprehensible. Billions and trillions. I mean, it's just unbelievable how big government in Washington has become. And I think one of the areas the Trump administration is focused on is how to reduce the scale and scope of spending here in the United States, whether it's the efforts at DOGE or the debates that are happening right here, right now as we speak, about, for example, Medicaid and the cost of Medicaid to the states. The Trump administration's really thinking about how do we help to solve our nation's spending problem. And then at the same time, they're grappling with what is the right tax policy that helps us to pay for the promises that we've made to the American people, and yet ignite the maximum amount of growth that we can achieve in our economy. Because when it's all said and done, the only way the United States will solve for the promise it's made to its people is for us to far more rapidly grow our economy.
What role is deregulation going to play in that?
Well, I mean, deregulation is clearly already one of the huge accomplishments of the Trump administration. And why do I say that? Because the onslaught of new regulation has stopped. That in and of itself has been incredibly powerful for corporate America, the ability to focus on growing your business again without worrying about what new rules can be imposed upon you from Washington. Now, having said that, the efforts to deregulate are going to be more slow because it takes time to re-underwrite why was the regulation put in place to start with. How does this regulation serve the interests of the American people? It takes time to thoughtfully deregulate our economy.
Now, your companies have a footprint all over the world. Are you seeing investors hedging against U.S. instability, diversifying away from U.S. stocks or even U.S. treasuries, given the changes and the uncertainties that still exist around them with the administration?
I think there's been two very strong realizations by investors around the world. First, there was a bit of a knee-jerk reaction to pull back from the United States, to be anxious about investing in America, given the stance and changing stance we took in areas like trade. But then there's also just a realization that no country in the world enjoys the rate of innovation and commercial development that we enjoy here in America. And so you have these two competing arguments that investors around the world are grappling with. Is the United States going to be a reliable ally and economic player in the world markets? And compare and contrast that with the reality that if you take a step back, no country in the world, other than perhaps China, comes anywhere close to America in terms of the rate of innovation and creative energy that goes into growing our economy.